Trading a flip-flopping strategy is never actually going to make you any money in trading, but trading a losing strategy for a period of time is going to, at the very least, allow you to gain an education on said strategy, on live execution, and also with sticking with something for a prolonged period of time. I would argue you are far better off in terms of profitability in trading a losing strategy than you're ever going to be by flip-flopping going back and forth. How I would view this is that if you had a trader and they took one loss, they might not be too bothered by it. If they go ahead and then take another trade and also so happens to be a loss, they're probably going to be sweating a little bit, particularly if they're a losing trader or a break-even trader. Go and add a third loss in a row to this, and they more often than not will completely implode. They will give up on their strategy. They will close it all down. They'll go into their journal. They will go right click and clear contents. And it never ever happened. They'll hop back onto YouTube, go into ICT or T Trades or whichever mentor they look up to. And they'll go and try and analyze the next strategy, which they think will finally be that holy grail that's actually going to make them some money. And they just go and repeat the cycle over and over again. One trade, two trade, three trades, four trades. They've not made any money. This doesn't align with the back testing that they did that said they should be a millionaire by now. So what do? They go into Excel, into their journal, they right click, they clear content, and then pretend it never happened. But the thing is, it did happen. If you've been doing this for over the course of weeks and months, yeah, sure, your journal's going to be the exact same pretty much all the time. It's going to be empty with no actual information. But if you go and look at the calendar, time has passed. Time will pass very, very quickly, particularly if you're flip-flopping. And that's why I believe you're so much better off with sticking with a losing strategy for a period of time than you're ever going to be from flip-flopping. If you continue to flip-flop back and forth between strategies, you're never going to learn anything. You're never going to gain any traction, any momentum. You're just going to be like a car just spinning its tires in place and not actually going anywhere. If you're to look at an equity curve, if you look at it from the 30,000-foot view, as a great corporate term for you, essentially is going upwards like this. It should always be growing if you are profitable. But if you were to look at it from a day-to-day standpoint, from a more operational view, that equity curve isn't just going straight up. It's going up and down, up and down, up and down, up and down. There's going to be wins, there's going to be losses. But on the whole, you should still continue to see a consistent push up towards growing your account. If you continue to stick with a losing streak, you are going to be going downwards. You're going to go in the opposite way. But once again, you're going to see up and down, up and down, up and down. The point of this being is that you're going to be building a picture and you're going to be able to look and see what's working and what's not working. If you continue to flip flop, you're not giving yourself a chance to see that picture unfold. You see it for a small portion and then you go back to zero. A small portion and back to zero. You're not going to actually do yourself any favors here in the long run. Consistently applying some kind of losing strategy at least tells you something, especially if you're able to go measure things. If you go and track your pre-market routine, your post-market routine, your emotions, your entry, what was the news, what was the higher time frame basis, where did your stop loss, where did you put your entry, where was take profit, where did you take break even, did you scale in, did you scale out? There's so many different things that you can go measure and you can build up this picture and actually get an understanding of not only how the market works, but also how this strategy works. And over time, you can start to make small refinements here and there. So while initially in this losing strategy that we're talking about, you may be going down, that rate of loss will eventually slow and begin to come back up again. And you should start to see improvements through this refinement. One way that's just come up in my head, if you are a Formula One fan and you're watching the F1 and your team's not doing very well, well, they may not be doing very well at the start of the season, but throughout the season, what they're going to do is they're going to bring new packages a new engine, a new aero package, a new floor, a new front wing, whatever it may be. And you'll start seeing their average lap time should start to come down slowly but surely, and they should make improvements. So once you've agreed that you're going to stop flip-flopping, and you mean it this time, what I want you to do is pick a style, a strategy that you're comfortable with and that you can consistently execute on, something that aligns with your lifestyle. Go back and back test it over the course of 6 months. Then sit down and refine. Where can we do our stop loss? What about our entry, our take profit? So many different things, so many different levers you can go and pull on. Find something that is conservative. So just because you can move your stop loss to 4 pips per se does not mean you should. Maybe keep it at 5, maybe keep it at 6, maybe keep it external range liquidity, which might be even wider than that. Just make refinements that are conservative, but in your opinion, you can execute on, you're comfortable with, and give you an initial sense of confidence that you can go and actually apply this to the markets. Once you have done that, there is one single goal, and it's really simple for the first day. It's not even a day, it's a session. Sit down and trade that style for one session. That's it. It doesn't matter if you take a trade or you don't. It really does not matter. It doesn't matter if the winning trade, if it's losing, if it's break even. It does not matter. The only thing that matters is at the end of that session, you can look back and say, yep, I stuck exactly to the plan that I set out in these rules. After that, do a full day. Once you've done a day, string together 2 days. Then go for an entire week. If you can stick with that single style for an entire week, no matter if it's winning, losing, break even, if nothing was taken, so long as you can stick with it, that is a positive milestone that you have now achieved. Next step, let's go for a fortnight. Let's go for a month. The goal should not be the outcome. The goal should not be to see your account growing or your account getting smaller. The goal should simply be the process. Excuse me. The goal should be being able to look back at the end of that day, that session, that week, that fortnight, that month, and able to look back and say, yep, I stuck exactly to the rules and processes that I set out. That's the success. Should be your measure of success behind this. If you can do that for a week, reward yourself. If you can do it for a fortnight, again, reward yourself. A month, absolutely reward yourself. Because you, at this point, probably are doing something you've not actually successfully done before. And that's it. That is it. Really is that simple. Stick with it for a week, a month, whatever it may be. Build up that picture. And after a week, you can do a little bit of refinement, but only do one or two things. The next week, again, small refinements, small adjustment to TP, small adjustment to your entry, whatever it may be, and keep refining until the equity curve, instead of going down, begins to revert back round and we start seeing some profits. Stick with the plan, follow your processes, and forget about the outcome. The outcome is simply downstream of sticking to those processes, which I know I constantly just bash on about. But the reason for that is the most important part of trading is just sticking to those processes. But yeah, that is it. Thank you for watching. You can, I was going to say you can get these slides on Instagram, but you've already seen them on YouTube, so there's absolutely no need. Yeah, cheers. If you ever wanted confirmation that I'm absolutely not a social media person, the fact I ended this video with, yep, you've already seen it, so don't bother going to my Instagram, and yep, cheers at the end probably confirms it.